Hi everybody, this is Lara with your regular weekly Bitcoin video for the week beginning Monday 30th of May 2022. It looks like today Bitcoin is breaking upwards out of a small consolidation that it was in for 17 days, and that supports what's now the main Elliott Wave count. Last week I had two daily charts for you and I judged them to have an about even probability. This week, because of this upward breakout mostly, I'm expecting that the first daily chart, which is now the main count, is somewhat more likely. So it looks like Bitcoin's low may be sustainable and it may be in the very, very early stages of a new bull run, but there will still be very deep corrections along the way. That's normal behaviour for these markets. My target for the third wave up is highly provisional, calculated now at 409.17. It could be met about May this year. It's possible still we could have another slight new low before the next bull run begins, and I have a new target on the alternate weekly chart. 124654 again could be met about May next year, so to take about a year. Elliott Wave analysis first, classic analysis last. Next week I'll be going over monthly charts with you when we have a completed month. This week I'm just looking at weekly and daily charts with you. Here's the end of the last massive bear market for Bitcoin, an 84% reduction in market value lasting a year, the end of cycle wave 2. So I have cycle wave 1 complete off to the left of the chart. This low here I'm labelling cycle 2 and the start of cycle 3. Cycle wave 3 may only subdivide as an impulse and it should last from 1 to several years. Within cycle 3 I'm labelling primary 1 complete at this high and primary 2 complete a 65% correction of primary 1 lasting 26 weeks, subdividing as a zigzag. It fits beautifully in this Elliott channel, drawn from 1 to 3 with a copy on 2 around primary 1. Primary 2 may have found strong support at the lower edge of that channel. My target for primary 3 is highly provisional. It's not really a target, it's more of a minimum expectation. In Bitcoin's past price history, at third waves in relation to the counterpart first waves, this is the shortest I have seen in Bitcoin's price history. If this is intermediate 3 and this is intermediate 1, intermediate 3 was only 5.71 times the length of intermediate 1. Bitcoin's prior third waves are more like 15 to even 50 times the length of their counterpart third wave. So this is the shortest I've seen, which means my expectation for primary 3 would be a minimum 5.71 times the length of primary wave 1 from low to high. So that's how I get this, not target, it's a minimum expectation. It's probably not nearly high enough. Let's take a look at the daily chart. The first daily chart will label primary 2 over here, and the second daily chart will consider one more slight final low, and that's now judged to have a lower probability. First daily chart, end of intermediate B up here. Here's intermediate B, here's intermediate C, subdividing as an impulse, minor 1, expanded flat for 2, 3, quick sharp zigzag for 4, 5. It's really normal for Bitcoin's impulses to have this curved look. The second waves are normally more time consuming and normally really deep, and the fourth waves are normally more brief and shallow. This is a tendency that Bitcoin and other cryptocurrencies share with commodities, but they do so in an even more extreme manner, and I'm used to this tendency after analysing gold and silver on a daily and weekly basis for many, many years now, and oil as well, which doesn't tend to do it as much. That tendency of the second waves to be time consuming and deep and their counterpart fourth waves to be brief and shallow gives those impulses a curved look, and it happens because the fifth wave, particularly the fifth wave to end a third wave impulse 1 degree higher, tends to be particularly strong. And the strength of that fifth wave seems to force the fourth wave that comes just before and just after it to be more brief and shallow. So this has a really normal look for an impulse for Bitcoin. I'm describing this in detail because it's important when we get to the next chart. If primary 2 is over here, then primary 3 must have begun, and it may only subdivide as an impulse. Within it, I'll label minor 1 incomplete. When minor 1 is complete, I will expect a multi-week pullback for minor 2 to be very deep in the 80 to 90% range of minor 1, and it may not move beyond the start of minor 1 below 26,350.49. It's normal for Bitcoins, particularly third waves, to start out slowly, to have deep and time-consuming second wave corrections. I'll expect minor 2 and intermediate 2 to be deep and time-consuming. And then the third wave accelerates through the middle and it explodes at the end. So I'll be expecting intermediate 5 of primary 3 to be the strongest and longest wave of 1, 3 and 5. At the daily chart level, if primary 2 is not over, then intermediate C would be labelled 1, expanded flat for 2, 3, double combination for 4, and then needing 5. But now 4 is more time consuming than 2. This is not a normal tendency. And this upward breakout from here's a consolidation, and this session is breaking out upward from the consolidation. That supports the main wave count, not this alternate. So this is now judged to have a lower probability. It is possible though, and we need to consider alternate possibilities and not just get stuck on one wave count. If this is correct, then I would expect minor 5 to move at least a little below the end of 3, but not by much, possibly to form a double bottom. The target zone remains the same and the lower edge of the target zone is still preferred. Minor wave 4 may not move into wave 1 price territory above 39,388.33. A new high above this point would invalidate this alternate, and so that would provide confidence in this main daily wave count. At the weekly chart level, we still have this alternate, and I'm probably going to have to run this alongside the main weekly chart for possibly over a year, most annoying, but I'm going to judge it an alternate, mostly because the structure of intermediate 4 is atypical. It's possible primary wave 1 may not be over with intermediate 1, 2, 3, 4 and 5, and I'm giving a target for intermediate 5 1.618, the length of intermediate 3 at 124.654. The problem here is the structure of intermediate 4. It meets Elliott Wave rules, but it isn't normal, it isn't typical. First of all, you can't label intermediate 4 a single zigzag with A as a 5 ending here and B, because when A subdivides as a 5, B may not move beyond the start of A, and here it has. That would be an invalid wave count. So I'm considering intermediate 4 a double zigzag. W, the first zigzag in the double, is joined by a 3 in the opposite direction labelled X, which is an expanded flat, and then Y, the second zigzag in the double. Multiple zigzags should have the same look as single zigzags. Single zigzags are sharp movements, they have a strong slope. To achieve a strong slope of a multiple zigzag, the X waves within them are normally brief and shallow and should not, it's not a rule that's breached, but it's a guideline that's broken here. X should not have moved beyond the start of W. It should have been brief and shallow, ending somewhere around here, but it hasn't. It's moved beyond the start of W. This is extremely, extremely unusual for a double zigzag, but if this is intermediate 4, this is the only structure I can see that it could be and meet Elliott Wave rules. So the atypical look and the not adhering to the guideline for where the X wave should end, and the whole overall look of the thing being sideways, not having a strong slope, reduces the probability of this wave count quite reasonably actually. If intermediate 4 is not over and it continues any further, it may not move into wave 1 price territory below 13,826.76. Okay, classic analysis now. At the weekly chart level, strong support at 29,000 has held. This downward movement completed a hammer candlestick pattern. It has pushed from volume. This looks like a selling climax. Strong support is holding and price is now bouncing up. Look out for quite strong resistance above, possibly at 34,000. That may initiate another pullback. The last signal from on-balance volume was bearish. That may now be resolved. There's no new range for on-balance volume. RSI in neutral territory. It didn't get oversold, but it got kind of close. ADX still indicating a downward trend. It's bearish. It is based on averages. It's based on a 14-week average, so it is a lagging indicator. ATR declines as price moves sideways as normal behaviour, and stochastics looks like it's returning to neutral. And I keep leaving this here at the weekly chart level, the correlation coefficient between Bitcoin and the S&P 500. Again, I've had people asking me why I'm expecting different movements for these two markets. Well, this is why. They just aren't always correlated. That correlation, while it is quite often positive, can and absolutely has before broken down and moved fully into negative territory. And so they don't have a statistically significant positive correlation despite many people assuming they do. And so I cannot base my analysis of one on what the other may or may not be doing. And that also assumes that I'm getting either one of them right anyway. I could have them wrong for both. So they're just not correlated reliably. Bitcoin looks like for this session it's breaking out upwards from this consolidation which lasted 17 days. This looks like a bull flag pattern. I should actually calculate a target for you from the flagpole. Let me just do that. Flagpole from this low to this high and adding it to the breakout point gives us a target from the using this flag pattern of about 35,523, which is just above resistance, so it might be a little bit too high. I will be looking for a pullback along in this possibly new upward trend, about 34,000 to 35,500, somewhere in that range. The next pullback may be initiated. Volume is also pushing price higher for this session. It hasn't closed yet, but it looks extremely likely, unless something strange happens in the last few hours of the session, it looks extremely likely to close above resistance, this resistance line, and it's doing so with push from volume, so we can have confidence in this upward breakout from this flag pattern and some reasonable confidence in that target, 35,500. On balance, volume gave a bearish signal. It broke below support here, and it made a new low where price did not make a new low. And so this is bearish, and this supports the alternate daily Elliott wave count. It's the only support I can find for that wave count though, and I would give much more weight to the flag pattern and the upward breakout with support from volume. ADX told us the prior downward trend was very extreme. It's now declining. There's not yet been a crossover of the DX lines, but that looks likely to occur quite soon. If it happens, it will be telling us there is a potential trend change to up. Again, this is a lagging indicator. It is based here on a 14-day average. RSI in neutral territory, as is stochastics, and ATR declined as price moved sideways in that flag pattern. That's all from me with your Bitcoin analysis this week. I hope all our members had an awesome weekend.